Experts think that the six-member MPC of the RBI will most probably maintain a status quo during the October 6th policy review. The MPC had increased the repo rate by 250 basis points to 6.5% between May 2022 and February 2023, after which it hit a pause in the April review of the monetary policy. Experts told Business Standard that the RBI MPC was likely to maintain a status quo because food inflation had subsided. They added that while vegetable prices were under control, crude oil prices could become an issue going forward.
We expect RBI to hold the rates steady and I think hold them higher for longer. Already we are seeing there is a tilt towards tightening liquidity. So that's the reason for that is we got a shock from food inflation, particularly vegetables, which is correcting. But now I think the fuel prices are becoming a worry. So central bank will not lower its guard and keep the rates where they are, and maybe for longer now than we earlier expected.
All 10 respondents in a Business Standard poll also said that the MPC was expected to maintain a status quo in the October 6th policy review. Ahead of the MPC meet, consumer price index-based inflation eased to 6.83% in August from a 15-month high of 7.44% in July. This drop came mainly on the back of a decline in the rate of the rise in vegetable prices. Only 3 respondents expected the RBI to marginally raise the FY24 inflation projection. In the August policy, CPI-based inflation for FY24 was projected at 5.4%. On the other hand, none of the respondents expected the RBI to revise its FY24 GDP growth forecast from 6.5%. And except PNB Gills, all the respondents expected the committee members to maintain the withdrawal of accommodation stance. They expect the RBI to do so even as net liquidity in the banking system remains in deficit.
I think they'll continue with the stance of withdrawal of accommodation because I think, as I said, the inflation is still a worry. I mean, it's come down a bit, but I think the risk is still there because of the monsoons, because of the El Nino, and now also because of the fuel.
PNB Gills Managing Director and CEO Vikas Goyal said the stance would change to neutral because inflation trends were going to come down in all probability. Goyal also said that some forward forecasts on growth were showing cracks despite the numbers being good at present. Thus, he added a stance change was required to create a path towards an eventual rate cut. Overall, the thinking among experts is that the central bank will look to keep liquidity at a level while also keeping in mind the requirements of the festival season. Above all, the RBI will stay vigilant.
I think the key question is how far the oil will rise and how long will it stay there. I think because the rising oil prices create risk for inflation, they create risk for current account deficit, and they also create a downside to GDP growth. So I think it's time for vigil, not for alarm, I would say.
In conclusion, the expectation among the respondents to the Business Standard poll is that the tone of the policy will be hawkish even if interest rates are kept unchanged.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.